Nvidia has skyrocketed a massive 1000% since 2022's low. Yes, this is a top pick for many investors, but with over 20,000 stocks in the market, there are plenty of other stocks investors do not know about or overlook that not only have serious potential, but are about to take off. The stock I'm going to share with you has already moved up 45% in the last 12 months. It is setting up just like Nvidia did, and it's ready to take full advantage of. So let's get right into it. The next Nvidia stock I have for you is CBOE Global Markets, ticker CBOE. CBOE is an American company that owns the Chicago Board Options Exchange. 10 years ago, they had a market cap of $5.3 billion. Today, it stands at $21.4 billion. So no slouch of a company with a growth of over 300%. CBOE is probably not a name you're familiar with. It's a financial sector stock that's been flying under the radar. But think about it for a second. Unless you're a PC geek, many had never heard of Nvidia until very recently. The AI hype brought it into the spotlight, so it's no different for CBOE. For this analysis, we're going to use what we call the 4PS method. It's a systematic way we created to evaluate stocks and spot potential winners before they take off. Every stock we invest in goes through 4 distinct phases. So let's break them down. Phase 1, historical trends always come first. We look at the stock's history to check for past trends. This gives us an idea of the stock's potential. CBOE has shown solid growth in the past, which is a good sign, climbing over 300% from its IPO in 2010 to 2018's high. Phase 2 is a sideways market, or also known as a consolidation period, and it's crucial. Think of it like the roots of a tree. The longer and thicker the roots, the taller and stronger the tree will grow. In stock terms, a longer consolidation period often leads to a more significant uptrend. We like to see at least 3 to 6 months of consolidation. CBOE had been in this phase, building a solid base for potential growth from 2018's high to July 2023. That's a 5-year period. Phase 3, the breakout from consolidation. This is where things get exciting. CBOE broke out from its consolidation in August 2023, signaling the start of a potential uptrend. But here's where many investors make a mistake. They jump in too early. We need to apply some patience to avoid the stock reversing back into phase 2, which is known as a fake breakout. Phase 4 is the confirmed uptrend, and this is where we want to enter. We wait for further momentum to the upside to confirm that a trend is in progress. It reduces our risk and increases our chances of catching a significant move. CBOE has climbed around 50% since phase 4 started last year in August 2023. Okay, so here's a pro tip. You want to find these stocks before the hype hits. That's how you maximize growth during the hype cycle. And guess what? There are ways to find these hidden gems using a simple yet sophisticated, systematic approach built on today's technology. We've dived into a big part of that using the 4PS method and charts. Now, here's a critical point I want to emphasize. The only aspect of an investment that is out of our control is the outcome. We can't predict with 100% certainty whether a stock will be a winner or a loser, or how high it will go. But everything before that, from choosing the stock to when we enter and how much we risk, is entirely in our control. So, how do we play this potential CBO opportunity? Well, based on our analysis, CBOE has recently broken out from a 6-month consolidation, so another move from phase 2 to phase 3. We now want to see further momentum to the upside and avoid the fake breakout back into phase 2. So how do we do this? Here's another pro tip for you. We want to see momentum to the upside, a pullback, and then another breakout. This setup increases the odds of a move to the upside and a phase 4 uptrend, and reduces the chances of a reversal to the downside and a move back into phase 2 consolidation. Once phase 4 has been confirmed, we could see CBOE head towards the $300 mark. That's the next major round number above current price action, as stocks often move towards these psychological levels when trending. After that, every $50 will be significant. $350, $400, $450, $500, and so on. But remember, we're not fortune tellers, we're probability players. So here's how we manage our risk. Wait for a high probability entry to be confirmed. I've just talked about that with the breakout, pullback, and next breakout. Allocate a small position size, no more than 2% of your capital typically. Use a wide stop loss based on CBOE's volatility, which we call the average true range or ATR. Let me break down that last point in a little bit more detail. Let's say CBOE's ATR over the last 30 days is roughly $7. We might use a multiplier of 4, giving us a $28 stop loss. Personally, I use an even wider stop loss because I'm aiming to catch these big moves and reduce the chances of getting stopped out due to normal volatility or normal pullbacks in the trend. Now, here's where the real magic happens. If CBOE starts trending up as we expect, we hold for the entire trend. This typically lasts 12 to 18 months. But we don't just sit on our hands, we compound as the trend develops. This means buying more of a winning stock. But wait, there's a catch. We're not just blindly throwing more money at it. We reduce risk on the previous position, so we're adding more of a winning stock to the portfolio without adding any more risk overall. It's a balancing act that can lead to large exponential gains if done correctly. Let's put this into perspective by looking at Nvidia again. If we applied our 4PS logic to Nvidia, we can see that the current trend has climbed 275% since May 2023. Now, I'm not saying CBOE will do the same. Remember, we can't predict the future, but it certainly has the potential to climb multiple times over and over. And if it does, we'll be there holding and buying more. In fact, we've been buying CBOE since November 2023, catching the start of this almost 50% climb. We're now looking to add further positions and to compound our profit and accelerate the profit potential of CBOE. CBOE is already a profitable stock, and it's about to start its second phase up since the bull market began at the end of October 2022. To put this into context, Nvidia has had 3 massive uptrends. That means CBOE could potentially have many more up phases ahead. But here's the key. We don't predict, we follow. As long as it keeps moving up, we keep holding and buying, in line with 2 crucial investing mantras. Cut your losers short, let your winners run. The trend is your friend until the bend at the end. This is actually what good investing is all about. It's about spotting potential before everyone else does. And as you get better at this, there will come a time when you'll never miss a stock again. This is why we adopted a systematic approach to stock picking. Now, I know some of you might be thinking about other hot stocks out there. Palantir, for example, has been building a lot of buzz this year. Watch this next video where I discuss Palantir, which is finally back above $30, and whether there is a buying opportunity in this stock right now.